As the COVID-19 lockdown comes to an end, municipal, provincial, and federal governments will have to account for the billions of dollars they've spent over the past few months and find a way to start paying for it. One way is to make the unavoidable decision to seek new revenue resources through tax increases. You see, the big question is, can you do something to protect against any potential increased tax? Hi, my name is Amandeep and I'm a CPA practicing in the Metro Vancouver region of British Columbia, Canada. You see, tax increases can take many forms, the most noticeable of which is to simply raise the overall tax rates with a focus on high-income earners. Also, the capital gains inclusion rate might be increased. Currently, if a taxpayer realizes a capital gain, only 50% of that capital gain is included in income. If the inclusion rate is increased to 75%, and such type of increase has already happened in the past, more of that capital gain will be included in the income. Thus, more taxes will be owed. And this can be done even without an increase in the tax rates. If you are expecting to realize a substantial capital gain soon, such as on the sale of a business, investment portfolio, or real estate, you might have to pay a higher overall tax on your capital gain if the capital gains inclusion rate increases. You see, there are other measures the federal government could take, such as making part of the gain on the sale of a principal residence subject to tax, eliminating the capital gains deductions on a particular eligible property, increasing corporate tax rates, or even increasing the goods and service tax. There is a widespread speculation about how the federal government will proceed, but no one knows for sure. As a result, you might want to get ready, as this government is strategically well positioned to start implementing massive tax hikes aimed directly at high net worth Canadians, small businesses, and corporations. If you want to be proactive, now is a great time to map out your tax strategy. One such strategy is the prescribed loan strategy. Your CPA can plan the proactive steps that can be taken now to potentially mitigate the risk of higher taxes in the future. If you want to be notified about our new tax updates, please do consider subscribing to our channel. Thanks for watching and see you in my next video.